Stocks trade soft but ranged after Trump imposes 25% tariff on India, higher than most trading peers. Healthcare and oil and gas are the big drags, while FMCG ekes out gains.
Sun Pharma takes a beating on concerns that after Trump's directive to 17 global pharma names to make drugs more affordable, the company's innovative portfolio might be targeted. This basket accounts for nearly 20% of the company's sales.
Swiggy's quick commerce losses mount even as food delivery profit expands. The digital platform calls this the peak of quick commerce losses and drawing buying calls from analysts. But the stock slips on profit taking.
Girish Housing, Kosli, the managing director of PNB Housing Finance, quits much ahead of his term end. Worries over the lender meeting its set targets spooks the stock following key exits. PNB says his resignation is only due to family commitments.
Good afternoon. You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangla Malu, with me Ekta as well as Vinny. The start of August series was supposed to be fairly muted, soft, but it's getting worse right now. Any recovery is being vociferously sold into. The Nifty is at a very important level, 24,647. Why do I say that? Because yesterday's low was 24,635. So the intraday panic that we saw, which was bought into in yesterday's trading session, the question is whether we are going back below those levels or not. And could yesterday's recovery just be an expiry-related move? So we'll watch out for where the market goes from here on. The street is pinning its hopes, as of now, on 24,550 to 24,650 to stay as a support. Midcaps faring much worse on day one of the August series. There are 1,500 stocks which are declining for every 1,000 stocks which are gaining.
Hi guys, yes, it's not only the start of a new series, but it's the end of the week as well. And it's not looking good in terms of the end of the week for the market. So, for example, the Nifty at current reckoning has lost around 0.5%, but the mid-cap index has lost around 1%. The small-cap index has lost around 1%. And not to mention in terms of the sectors, Nifty Pharma index has lost the maximum at current reckoning. Week to date, it's probably exaggerated in terms of losses, considering that it's currently down around 3%. We have the Nifty IT index, which is down around 1.3%. At this point and has lost close to around 3% for the week, and the Nifty Bank, which is down around 0.3% and lost around 1% on a week-to-date basis. So it's a tough week, you would have to say, and a soft start to the new series as well, guys.
Soft start to the new series as well, but some of these earnings candidates that came in overnight, they're managing to hold on to gains. We had Netweb Technologies, smaller end of the broader end of the market type of companies. Netweb Technologies, we had other companies also which are managing to hold on to gain. Indegene as well. And Radico Khaitan, we're seeing second day of gain that's coming in here first.
Yep, Radico Khaitan, post the numbers yesterday that came in incredibly strong numbers. The stock saw a bit of profit taking. Maybe it could have been, the post-result sort of impact that we saw sell on news. But now, today, it's holding up with gains which are more reflective of the kind of numbers that were there for the company. A strong set, the revenue jumped more than 30%, margins expand, and volume growth of over 40% as well. Abhishek Khaitan, the managing director of the company, joins in. Thanks a lot, Abhishek, for joining in. It's 2 quarters of straight 30% plus volume growth coming in for you. How much of that is sustainable, and how much of that is on account of the markets like Andhra opening up for you?
We started the year on a very, very positive note. And I think the last 7 years or 10 years of work of Radico is now finally playing out. And we are getting growth from all over, especially a lot of growth we got in Andhra because the market opened from a closed market to an open market. And there our market share is close to about 29 to 30% of Andhra's market. Then all our brands are doing exceptionally well in states like Uttar Pradesh, Rajasthan, Madhya Pradesh. Everywhere the brands are growing. And that should, the year has started on a positive note.
Okay, all right. But Abhishek, can you tell us what's the outlook for the next 3 quarters when it does come to volumes?
See, as of now, what I personally feel is that in this fiscal year, we should be easily doing 20% plus volume growth.
All right, 20% plus volume growth for the full year for the company, that is. Okay, and what about P&A specifically? What kind of volume and realization growth are you working with?
See, as far as the P&A growth, I've always guided that we concentrate on the P&A a lot, and we want the P&A to grow by at least 15%. But in this quarter, the P&A has grown a lot. It's grown by about 40%. But I think going forward, my guidance will be the same. Our concentration is in the P&A, the luxury, and the semi-luxury segment. And for the next 3 years, we feel that at least 15% growth in the P&A is easily possible.
Don't you think that 15% volume growth would be a bit conservative, given that you have grown 40% plus in Q1 itself?
I think next 3 years, the P&A should easily grow because all our brands are doing exceptionally well. Let me start with the little bit on the brand, how they are behaved in this quarter. Our flagship brand, Magic Moments Vodka, which did 7 million cases last year, and now it is the 5th largest vodka in the world. And we command a market share of 60% in the entire vodka space. So that grew by 20%. Then in 2022, we repositioned After Dark in the deluxe segment, which is one of the largest segment where Imperial Blue, brands like Imperial Blue, etc. are there. So in 2022, we did a volume of 9 lakh cases, which last year we did 1.9 million cases. And this year we are surely going to double it. And Royal Ranthambore, we are the only Indian company to price Indian whiskey higher than the bottled in India Scotch. And that brand also in the current quarter has grown by 89%. And I think by next year, we should be close to 500,000 cases. So I think overall, we are on the right track. And in our last interview with you, said that our concentration is in the semi-luxury and luxury, and which has grown by 50% in this quarter in terms of value. And we are well in target to cross 500 crores in the current fiscal.
Okay, fair enough. But will Imperial Blue having a new owner impact the competitive scenario, Abhishek?
See, I would not like to give any remarks on the competition, but I said that we have a brand After Dark, which is doing exceptionally well, and the number is speaking for itself. In 2022, we repositioned it, did 9 lakh, then 1.9, and this year we'll double it. And the brand all over is showing great response.
All right, great response for that brand, and you are not very perturbed by the competition coming in from new owners of Imperial Blue because your brand stands with them. What about the potential benefit from the India-UK FTA? You've been alluding to some margin improvement on account of that because of the Scotch that you import. But on the other hand, the offsetting impact could be from the Maharashtra excise policy. Do you have some numbers for the same?
See, as far as the UK FTA goes, if you see, we are one of the largest importers of Scotch in India. In the current fiscal, we are going to import about close to 250 crores of Scotch. And I think in the years to come, it's only going to increase by leaps and bounds. So with the duty reduction from 150 to 110, the max is very clear, which will come to us. As far as competition goes, I think a lot is to be seen because the state, it also depends on the state duty, but what maths we have done, that the prices of the imported Scotch should be in the range which will go down by about 5 to 10%. And as it is, if you see our Rampur single malt is priced much higher than most of the imported malts. So I think it's more of the brand perception, the brand quality which will play. And UK FTA will be definitely a great benefit to Radico. As far as Maharashtra goes, about only 4 to 5% of my volumes come from Maharashtra. And definitely the industry is going to see a decline. But I think as far as Radico is concerned, it won't be much of a concern.
So Abhishek, then what kind of margin improvement should we expect now to continue from here on in FY26?
See, as far as the UK FTA goes, is if you see, we are one of the largest importers of scotch in India. In the current fiscal, we are going to import about close to 250 crores of scotch. And I think in the years to come, it's only going to increase by leaps and bounds. So with the duty reduction from 150 to 110, the max is very clear, which will come to us. As far as competition goes, I think a lot is to be seen because the state, it also depends on the state duty, but what max we have done, that the prices of the imported scotch should be in the range which will go down by about 5 to 10%. And as it is, if you see our Rampur single malt is priced much higher than most of the imported malts. So I think it's more of the brand perception, the brand quality which will play, and UK FTA will be definitely a great benefit to Radico. As far as Maharashtra goes, about only 4 to 5% of my volumes come from Maharashtra, and definitely the industry is going to see a decline. But I think as far as Radico is concerned, it won't be much of a concern.
Right. All right, Abhishek, we're going to leave it on that note. Thanks very much for joining in. So that's Radico Khaitan. The stock is up around 5% They're targeting a 20% growth in volumes going forward. We need to take a short break on that note, but we'll be connecting with one of the important managements of today, Sun Pharma, to decode their Q1 numbers and also quiz them with regards to the situation on tariffs in the US. Welcome back. Well, let's talk about one of the top Nifty losers today, which is Sun Pharma. The company's Q1 performance was mixed as revenue was just shy of estimates, but margins improved. To discuss the quarter gone by, I did catch up with the company's CFO, Jayashree Satagopan, and began by asking her about the topic which is on everybody's mind, the impact of the letters written by President Trump to pharma companies to provide most favored pricing for American consumers. Listen in.
As of now, we have not received any letters, and as and when there is a further development, we will be in a position to assess it for our specialty portfolio.
Okay, so just to clarify on this, your specialty portfolio does consist of only branded drugs.
Yes, you're right.
Which are patented, and then once they go off patent, you will see generics come in. Is that correct?
Absolutely.
Okay. So what is the price difference of these specialty drugs that you sell, Winlevi, Illumia, Sequoia, etc., in the US as well as other regulated markets? What's the price difference?
The price difference between US and the other market varies. And at this point in time, these products are mainly in the developed markets.
Correct. But if in case Big Pharma is eventually forced to regulate their prices, say for their branded drugs, would Sun Pharma feel the pressure and have to follow suit?
Yeah, as and when we get the letters from the US administration, this could have an impact on some of our specialty products.
Okay, all right. As of now, you've not got a letter. If you don't get a letter, but you see your peers reducing their prices, would you be compelled to?
Yeah, we'll have to wait and see how this pans out.
Okay, all right. What would the impact be on generic drugs? Because does it shrink the size of the addressable market for generic drugs?
MFN does not have an impact on the generic drugs, as I understand.
Okay, all right. What is your sense in terms of the tariffs on pharma? As of now, we are on the exempt list, but what is your expectation? Do you expect any kind of tariffs, if in case they are imposed, say on the final product or on the supply chain, they would eventually be passed on?
See, at this point in time, the investigations under 232 is going on. Post that, we will get to know what is the thinking around the tariffs for the pharma sector. So we'll have to wait and watch on this front. And as far as the generics are concerned, we also need to consider the supply chain the economic considerations of manufacturing in India versus US, all of these will be looked into on a case-to-case basis as and when.
But you're not looking to expand your operations or manufacturing operations in the US?
We do have 3 facilities in the US, and at this point in time, we are not considering expanding the facilities further.
I just wanted to come back to the generic market in the US because, you know, the dynamics seem to be changing. There's price pressure. Key drugs such as Revlimid generic are now going to face competition. And the size of the addressable market of generic drugs is probably going to shrink if in case branded drugs eventually have to reduce their prices as well. Do you think it's becoming a tougher environment for generic drugs in the US?
See, the market per se is pretty large. And as far as the generics is concerned, we have been seeing challenges in terms of price erosion, and that's nothing new at this point in time. And therefore, we do believe that despite the MFN and the price pressures that could be on the specialty segment, the generics will continue to play a much larger role in the US market.
Well, let's get to the numbers now, because one of the things that's probably deterred the street is your tax rate, which has risen to around 25%. Just take us through that.
Yeah. See, over the past few quarters, we have been guiding the street in terms of our tax rates moving up. As a company, we did have the benefits of integration and MAT benefits, plus our plants in Sikkim and Guwahati also had the tax exemptions. With the sunset clauses, we will be getting back to the normalized tax rates, which is around 25%, and this is nothing new. I think we have been open about it. We have spoken to the street, we have spoken to the media, and it's a normal course of business. But Ekta, what I would really like to highlight here is the overall business performance of the company. As you could see, that the top line growth has been at around 10.1%, and the EBITDA growth has also been at a higher 19% or so.
Correct.
EBITDA margin has also expanded during the quarter. The tax is a function of some of the exemptions that were available earlier, and it will go through a sunset clause, and for the whole year, we do estimate that the tax rates would be in the range of 25%.
All right. Your guidance is still mid to high single-digit growth, correct?
Yeah.
Okay. What is that predicated on, and does it factor in the uncertainty from tariffs?
Yes, it does factor in the uncertainties from tariff to a certain extent.
Okay. You've also mentioned a $100 million investment on commercialization of 2 specialty products. Will you be deploying the entire $100 million?
At this point in time, we do believe that the investment of $100 million would happen during the year. These are for 2 products, which is Lexelvi and Unloxit. Lexelvi has been recently launched in the US. It's about a couple of weeks back, and Unloxit is planned for a launch in the second half of the year.
Okay. What is the impact of margins given that you will be spending this $100 million additional, and you will also possibly have a higher R&D spend, something that the company had guided towards in the previous quarter?
What we look at with these investments of about $100 million is the long-term impact that it could have for the company's business and its margin profile. We do not specifically look at a very short term or a quarter to quarter in this front, because these specialty products is going to have a longer life period, and initial investments would be required to help them, to help us unlock the potential of these products.
Specialty sales, what is the run rate that we could expect? You touched around $311 million this quarter. Is this the base rate that we can expect in the coming quarters?
Look, the specialty sales will be growing, and we believe that the sales growth will definitely be higher than the overall guidance that we have given for the company.
Okay. 3 of your sites have warning letters now. What is the plan on remediation?
So the sites are working on the remediation plan, including the actions that have been committed to the regulatory authorities. And we expect that we would get into a compliant state on this front.
What about the 8 observations?
As far as Halol is concerned, we did have the FDA inspection that happened during the last quarter, and the site has filed detailed response to the regulatory authorities. We will be awaiting for their feedback further.
All right. We understand that you're planning to launch semaglutide in India. What is the opportunity that you expect, considering that there will be multiple players that will be launching the drug in the country, plus the fact that there are growing concerns with regards to the side effects? There are newer drugs coming in. Novo Nordisk, in fact, slashed its guidance based on slower sales.
Look, semaglutide is a product where we think there is a very large opportunity in the country. At the same time, it is going to be a competitive landscape. This product will have room for many players, and it is also a pretty safe product. As far as Sun is concerned, we intend to launch this product on day one, and as you know, we are the leaders in the cardiometabolic segment, and we plan to leverage our presence in this segment and launch the product on the day one.
Okay, that's the management of Sun Pharma. Interesting insights coming in there. But on that note, we're going to slip into a very short break. Remember, viewers, you can tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes the global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Welcome back to Halftime Report on CNBC TV18. As of now, the Nifty is still at 24,660 levels. Keep an eye on that. But a lot of stocks that are buzzing in trade today, moving in trade on the back of their earnings and other news flow. Vivek is joining in with us to talk to us about that. Vivek?
Well, thank you so much for that. It's an afternoon where you're actually seeing more laggards than gainers, especially as far as the broader end of the markets are concerned. Very limited gainers, especially on the back of news flow. First on the list, Radico Khaitan, volume growth of 37% for the quarter gone by. Very strong set of results. That stock higher by over 5%. A couple of stocks as far as the wind energy space is concerned, especially wind turbine manufacturers. So Suzlon higher by 6% today. Remember, there has been a notification indicating that there has to be a higher domestic content usage as far as wind turbines and as well as renewable energy using wind is concerned. On the other hand, quite a few laggards as well. First on the list has to be PNB Housing. Now, that particular stock, you have seen the resignation coming in as far as the MD and CEO is concerned. We did have the promoter PNB speak to us earlier, but the street is not convinced. And on the back of that, almost 18% lower. Chola Finance, this particular company just concluded its conference call. They've gone ahead and increased the growth guidance as well as the credit cost, and on the back of that, down by over 2% today. IIFL Finance, this particular name, again, credit cost inch higher. Couple of key worries, especially as far as asset quality is concerned. That stock lower by 7%. Tata Motors, the surprise resignation coming in as far as the JLR CEO is concerned. That stock lower by 2%. And Sun Pharma, downgrade coming in from Investec. The effective tax rate higher than what the street was anticipating. That stock low by almost 4% today.
Right, those are a bunch of buzzing stocks. But what's the FNO update at this afternoon? Let's go across to Nigel. Nigel.
Well, that's right, Mangalam. The Nifty is a little bit skittish, but the only positive that I would see is that the India VIX is still not running away. The last time I checked, it was up only around 3%, with the Nifty down more than 100 points. Now, I'm looking at the options data, and the call writers are getting very, very confident. The 24,700 call, just take a look at the kind of open interest addition we have seen on the first day of a new series. 70-80 lakh shares being added at around 24,700 call, 24,800 call as well. So aggressive writing is what we're seeing on both those two strikes. And the last time I checked, the PCR had come down to around 0.8. It's not yet reached that 0.65, 0.6 odd, from where we did see a technical bounce, but that's gradually coming down because the kind of aggression we're seeing on the call writing side. So, if you're looking at levels, then the important mark to look at is there's a crucial support at around this 24,400 to 24,600. That's the important mark. You don't want that level to break because the bulls will believe they're still in the game. On the upside, yesterday's high, 24,950, important mark on the upside, which it's a distance away from current levels. But the recent low was in that vicinity of around 24,600. On a closing basis, you'll at least like to defend that mark. Individual stocks, these EMS plays, they're in a world of their own. For this week itself, they've seen a good amount of, of buying, and there is fresh long addition. You look at Kaynes, it's one of the stars of the week, up more than 10%. Long addition being seen out there with the stock moving up. And Amber Enterprises, the management joined us earlier today. They were talking about the electronics vertical itself scaling up substantially to $1 billion. That one as well is seeing long addition. And PNB Housing Finance, the stock is slammed down. There's a massive open interest build up out there. And just take a look at the build up. And I was looking at the MWPL, that's the market-wide position limit. If you look at it as a percentage, the open interest as a percentage of MWPL, it's in that vicinity of around 90-91%. Just to alert our viewers, when open interest hits more than 95% of MWPL, then it will go in the F&O band. So we're some distance away from that particular level, but there's a big surge, massive shorts in the system out there. Now, the markets are looking a little bit jittery, but two factors I wanted to highlight. One is the FI net short positions, they're the highest they've seen in multiple weeks and months. And at the start of the series, it's almost at the highest ever at around 90%. So that's giving a glimmer of hope that if you get a positive trigger, they'll be forced to cover some shots. And the other one is, we have seen a 1,500 point correction from the recent peak. But yet, we're not seeing the India VIX surge up. Till it holds below that 15-odd mark, the odds are that maybe, in fact, we see some kind of a recovery sometime during the August series, particularly towards the second half, we are likely to see that. So those are the technical indicators. Back to you.
Okay, all right, Nigel. Thanks very much for that. Just want to point out that while that's the F&O update, there are a couple of stocks which have really taken it on the chin on a week-to-date basis. Strides Pharma, for example, that company came out with its results this week. It's down 6% today and it's lost around 10% on a week-to-date basis. JM Financial also is down around 9.5% on a week-to-date basis, and RT Drugs as well, down around 7.5% at this point. We need to take a short break, but as we do that, a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
The Nifty is down almost 110 points, 350 points lower for the mid-cap index. Let's talk about cryptocurrencies then. It's been almost a year since crypto exchange WazirX was hacked, spurring losses of $238 million in investor funds. The exchange has ceased to operate, and soon after, WazirX, in fact, has been reorganizing operations under its new Singapore-based entity. There have also been reports of them moving funds from Bybit. The last year has been about litigation, court hearings, and funds stuck in lost opportunities. Manisha caught up with industry experts Chirayu Bagri of 9 Point Capital, digital payments expert Sanjay Saxena, and IndiaTech.org CEO and President Ramesh Kailasam to take stock of all that has unfolded in the last 1 year, but more importantly, the road ahead. Listen in.
The last 1 year has more or less been like knocking on closed doors, because I personally have tried approaching various authorities, various courts. Anyone who wants to hear me on this matter, seek cognizance of the same. I am personally an investor in the cryptocurrencies market in the VDAs since 2021. And I was a firm believer in this one coin called XRP. This coin has now gone up 600% in price. What WazirX is now doing is, there were two types of tokens, hacked and unhacked. My coins were not hacked, there were coins which were hacked. For example, Ethereum and Shiba Inu. XRP has gone up 600% in price. Ethereum and Shiba Inu are still at the price at which they were 4 years ago. WazirX is now in a conundrum. What has happened is no doubt very unfortunate. WazirX is now using funds from other users to pay the users who got their tokens hacked. This is something which I personally see as a violation of my fundamental rights, because they are socializing their losses. It is the onus of the reserve. 2 weeks ago, CoinDCX got hacked for $41 million. Within 17 to 24 hours, not only did they resolve the entire thing, but also made sure that any person who was an aggrieved party could withdraw their assets and could take the more money and move to another exchange if they wanted to. It's been a year. We are now fighting this in Singapore. WazirX since 2017 was carrying out its operations in India. Most of its customers are Indians. They are registered with the Financial Intelligence Unit in India. Why have they gone to Singapore? Right?
So, I get your point here, but let me come to you, Mr. Saxena. And you look at digital payments, and with the way things have really worked out and everything that Chirayu put out, I'll add one more to it, that is that the refunds perhaps are happening in rupees and not in crypto. So that is where another loss perhaps comes into these investors there. How have you read it all, and what is the solution that you would want to put forth?
Thank you, Manisha, for having me on this. Let me tell you the current resolution. It leaves many questions unanswered, rather providing a solution to the beleaguered investors or platform users. To cite few such, without going much into the detail, cite few such examples, there is no clarity as of who is the owner, where the ownership lies of the cryptocurrency on WazirX, to whom it belongs, whether it belongs to Binance, ZI, or the users as an unsecured creditor. There is, I generally say, clarity in the currency. Clarity is the currency in the digital ecosystem, and much more when we dealt with the VDA. In the proposed resolution, the funny part is in the proposed resolution, it is the majority or the 75% of the voting, those who vote, not the total, the creditor which represent, unlike in the NCLT resolutions, where the committee of creditors, 2/3 of the total have to vote in favor of the resolution. There is nothing such as such in this case. So my point is, there are many operational issues and the unresolved questions which is not there in the proposed in the resolution plan. And in fact, the current plan doesn't respect, if I have to say, the user's asset right. This is not a mutual fund. Crypto asset class need regulatory fairness. This is what I want to say.
Mr. Kailasam, interestingly, Mr. Saxena also talked about NCLT here. Now, we are talking about an area where it's more about KYCs, the regulatory authority, grievance cell, etc. is not there. What's your sense? What is the solution that you see even after a year where we are still looking at third-party audits, where we are still looking at some accountability?
Well, I think hearing both the panelists, I think one thing is pretty clear, that there is a need for guidelines and standards in digital asset resolution per se. Investors are raising these concerns, and that also signals that there is a need for maturity in these areas from a governance standpoint. The observation that there is growing need for all of this signals the need for I would say a standard or something of that sort to be built in the digital asset resolution process. Investor concerns about resolution refer to clear procedures for handling things like insolvencies, asset recoveries, dispute resolution, and overall legal certainty in the event that we are supposedly facing such issues. And regulators worldwide are grappling with this and refining the frameworks quickly on digital assets. For example, jurisdictions are already implementing what is called digital asset resolution packages, DARP, to address insolvency scenarios. In essence, investors are also raising concerns about resolution standard and so on. That also signals the fact that investors are not here just for high returns, but also foundational elements of a well-functioning and secure financial market in the virtual digital asset space. And there were examples given on how quickly one exchange was able to resolve versus other which wasn't able to. And this is, I think, a critical step which India needs to take towards digital assets being fully integrated. Investor, I would say, rights and the methodology being clear-cut laid out from what you call a governance standpoint.
Welcome back to Halftime Report on CNBC-TV18. Let's talk about numbers of team lease services. Muted said that came in Q1 FY26. Margins largely came in line with what the street was expecting. The stock did open up sharply in the green and then has seen a bit of a fall, but as of now holding on to gains of 3%. To talk about the outlook of the company, we have Ramani Datti, the CFO at Team Lease Services, joining in with us. Ramani, good afternoon and thank you so much for joining us. Let's start by talking about the big point that's coming from the IT hiring trends. Now, TCS has obviously spoken about that layoffs coming in at 2% for its global workforce. What are you seeing in terms of IT hiring trends? Q1 as well as in Q2, how is it shaping up? Also, between permanent staffing and contract staffing, is there any change in terms of those trends in IT as well?
Yeah, sure. See, as far as IT is concerned, let's discuss in two parts, because on IT services, we are not seeing any kind of green shoots as of now. And now with reports like TCS going with aggressive layoffs, it can further go down, because on contract employment, it has already got corrected substantially. So now the numbers that they're talking about are largely on full-time employees on their roles. So on IT services, as of now, we are not seeing any kind of indication in terms of pickup in hiring trends. So the current sluggishness may continue into this year as well. However, on the other side, the IT hirings in GCC captive companies and non-IT companies, because many non-tech companies are also setting up large tech teams for their internal digital projects and transformations, digitizations, those kind of aspects. They're all setting up their own large teams internally. So there the hirings are very good. So, but these numbers may not offset the job losses or the sluggishness of overall hiring on IT services. In terms of volume, they may not be able to offset. But for niche skilled people, there are still openings in GCCs and captives.
Mr. Ramani, just wanted to get a sense in terms of how exactly is AI affecting hirings, if that's the case as yet?
To some extent, but it's very difficult to kind of translate what exactly is the impact of AI on jobs, because it is increasing the productivity of existing base, and companies are also using AI tools as one of the major drivers for cost savings. And definitely it is having an impact, but if you ask me to translate that into either a number or saying the entire impact on hiring, is it solely because of AI? Definitely not, because the global IT headwinds, drop in overall discretionary IT capex, these are the main reasons for not having a pickup in IT hiring. And also AI to some extent, but I would put that in the least of the concerns right now. Mainly would be macro headwinds.
That's macro headwinds that you are citing as reasons for weakness. But, Ms. Datti, what we also understand is that a lot of the blue-collar jobs are now in serious demand. And that is a growth opportunity for a lot of companies that are in verticals like this. Are you looking at this as an opportunity? Do you have any, revenue coming in from this vertical?
Definitely, because for us, the largest chunk of our business is mainly into grey collar and blue collar. White collar, we do under our specialized staffing segment, but that contributes to roughly about 5% of our revenue. But the rest of the business is mainly into these segments. And as you rightly mentioned, there we are seeing significant pickup in demand, and specific to blue collar industries like manufacturing, infrastructure, engineering, pharma. So there we are seeing very good demand in the coming quarters.
Could you give us a sense of what proportion of your business comes in from there, and what are the margins like in that business?
See, broadly for us, our largest segment is BFSI, but there it's largely grey collar and white collar. We don't do blue collar. BFSI contributes to about 22%, followed by FMCG, FMCD, retail, that's another 20%. Manufacturing is about 12%. Again, if we take industrial, engineering, pharma, these kind of sectors, that would be another 8 to 9%.
Ramani, are you still seeing a bit of a slowdown in that BFSI sector, which you were seeing in the last couple of quarters, or are we seeing a recovery here?
We are expecting a recovery in Q2 because this year the monsoon has been good and the festive season outlook is also good. So as of now, we are getting very good pickup in the open position specific to BFSI sector, because over the last 1 year, we have faced heavy headwinds in BFSI, both on NBFC side as well as last year, even on the bank side. So Q1 is also kind of flat as far as BFSI is concerned, but the open positions for the upcoming festive season in BFSI are good. So
okay, GCC is currently 64% of your revenue. How much do you probably expect it to grow to? And in Q2, how many clients are you probably going to onboard from GCC?
I may not be able to give the exact number of clients because we are having very active discussions, and some of the largest GCC setups are under discussion for onboarding in the next few quarters. So this percentage this year we are targeting to end by about 70%, to take the current 64% to about 70% to the GCC share.
Okay, that's great. 70% will be the GCC share that will come in for the specialized staffing side as well. Thank you so much, Ramani, for speaking with us this afternoon. But on that note, we're going to slip into a very short break. We'll get you more on the markets and stock-specific action on the other side.
Welcome back. We're still pressured for the market. So we have the Midcap index, which is down around 0.6%. The advanced decline ratio also firmly on the declining side. So it's currently standing at around 1:2 on the Bombay Stock Exchange. Talking about specific stocks, however, from the broader end of the market, we do have a couple of movers. So Kaynes Technology, we did speak to the management yesterday. That stock is currently up around 3.8% and it's done well for the entire week. It's up around 12.5%. So doing well for that particular counter. We also have a couple of others such as Affle in Industries, which is up around 9.6% on a week-to-date basis. But overall, texture of the market is definitely on the negative side. Let's see what the second half holds. It's a wrap on Halftime Report. Business Lunch will take all of the action ahead. Stay tuned.